Yo, what's up, guys? It's your boy Looney. Big week ahead because we've got the FOMC meeting this Wednesday, and the Fed is widely expected to cut rates. Now, on the surface, that sounds bullish, but I want to break down why it might not be as simple as rate cut equals stocks go up. But before we get into this video, I want to give a shout out to the Discord. It is free to join. And then I also offer a premium membership that's $8 a month, which gives you access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links that are in the description. So let's actually pull up the rate cuts. And I actually did a gamble on this, basically betting that they will cut rates. And you can do that on Robinhood through the prediction markets, and it should be available on the mobile device, but I have $770 betting that they will cut, and if I win, I will get $1,100, and it is looking very likely. But why are they even cutting, or why is it likely? And it's all because of the ugly job reports we've been seeing. Last week, we had data showing huge misses on employment, and the Fed is stepping in to support growth. Now, rate cuts do make borrowing cheaper, which helps the economy, but it also signals that things under the hood aren't as strong as people want to believe. Now, here's the tricky part, because you could tell here that it is already priced in. The rate cuts have essentially already happened. They have pretty much priced in the fact that we are getting rate cuts. And that's because of this 90% chance, or in some prediction markets, it's actually showing a greater percent, about a 95% chance of us cutting rates, or the Fed cutting rates. So that's why we have been ripping these past few weeks, or these past few days. That is one of the reasons. There could be other reasons. Just today, we saw Elon posting of buying more Tesla. So that's why that actually hit higher, and other news events, but that is a reason we are seeing the market actually soaring. Past month, I'm actually up 7%. So it could be a chance that because this is priced in, it might be a sell the news event. So basically, traders are buying this rumor that rate cuts are happening, and once the news drops is when people sell. So Wednesday could either send us higher or be a trigger for a healthy correction. But what is interesting about today is the VIX. The VIX actually spiked higher, despite the market sort of trading sideways. That could be a foreshadow sign that traders are hedging for volatility ahead of the Fed decision. So usually when the market is green, the VIX drops, but we're actually seeing the opposite today. So something is brewing. We're also seeing a witching event, which is basically all the different options expiring on the same Friday. And that happens every quarter at the third week, or right before the end of the quarter, that third week. So we're going to see it this Friday where options expire, stocks expire, futures expire. All these are expiring on the same day. So generally that is a volatile time. And also you combine that with the Fed rate decision this week, we could see that people are preparing for that volatility. Perhaps they're buying puts, perhaps they're just simply hedging, who knows? But we are seeing the VIX actually trade higher. Now, let's go over what I did today. We're going to transition over to that. And one of the cool things or interesting things that I did is I actually opened a position on Open. You might have seen this stock everywhere on your timeline. It's all over X, and people have been posting about it, and it's one of the hottest trades recently. But I was very careful about investing into this. I didn't want to FOMO buy. So you can see it's a very small position. And I'll scale in if we do see some downturn or volatility this week. Who knows? But this is a very high risk, high reward play. So I size appropriately. You can see it's only taking up 0.5% of my portfolio. You might say that I didn't invest enough, but overall, I don't want to go more than this unless we see further volatility and I can get my cost basis down. But this is one of those gamble plays. I don't do these too often, but I guess I FOMO'd in. I saw too much going on about it, too much hype, and I don't want to be left out on this play. Now, another big play that I have going on this week is StubHub. So StubHub is going live this week for its IPO, and I queued up quite a bunch of shares. I have 333 shares queued to buy when this IPOs. I'm aware that IPOs, they don't always allocate all the cash at the same time. But as long as I get a few of these, I'll perfectly be fine with that. I don't care if I get full 333 or one. I'm not going to go more than that, or I'm not going to buy it after it actually IPOs. I'm only going to get that pre-sale, which is what I have queued for this. And these are the type of trades that I give to my Discord, but overall, these past IPOs have been doing pretty well, and they've been kind of dying off a little bit, but overall, they're developing good returns, and that's why I'm actually doing this play with that, allocating my cash there, because I see more opportunity with that than doing some of the stocks I own already, where they're more likely to go down, or the risk versus reward is not as good with those. But my other stocks are doing really well. Riot is up 80% now, and SoFi is absolutely soaring, up 146%. Oscar is the only one that's kind of showing opportunity. It is down 7%. So maybe I'll open a position, but as of now, I'm just kind of holding off on that. But just to wrap things up, all eyes are on this Fed Wednesday. Rate cuts do sound bullish, but don't get blindsided. It could be the spark for another leg higher, or it could be the excuse for traders to take profits. I'm obviously hedging with my covered calls and keeping cash, but I'm also keeping some stock in case we do see upward direction. Either way, this week's going to be volatile. Watch the Fed, watch the VIX, and don't get caught chasing. Until next time, peace.